Alright, folks, welcome to this week's Forex commentary and market review. And I think this is a new month, so happy new month. Um, Here we go again. So here is dollar index on the monthly time frame, and um, I think majority of the things we talked about last month, markets, are yet to trade into those levels. And obviously, from the monthly time frame, you can see this monthly candle. I think I've seen better daily candlesticks than what we're seeing currently on the monthly time frame. And one could argue that consolidations around areas like this make sense because we took out sell side here. Okay, so sell side liquidity and below this previous year low, and markets are in consolidation. Well, that makes sense, but it doesn't make sense when we go through the daily time frame and see how prolonged they've decided to stay in consolidation. I mean, what's the point of consolidation if there is levels you can key off of? But then again, when we go into the weekly time frame, we're going to see reasons for consolidation on the dollar index. But the truth is, price action like this aren't useful for anybody. Okay, it's difficult to make money in conditions like this, except if you're a scalper and you just go and take 10 pips here and there and stuff like that. But say you want to trade the monthly range or the weekly range, these types of price action can be really, really frustrating. Currently on the monthly time frame, you can see clearly that it's very difficult to determine dollar index because this is neutral, this is flat. Although I'm still holding on to the premise of the liquidity run below previous yearly low and the run below this low, and thinking that we could still potentially return into the range. But currently there is nothing on the monthly time frame that I can use to qualify that bias. So currently I do not know what currencies are doing. In fact, I'm not going to be trading currencies this coming week. I'm not going to be trading currencies. I'm going to be watching to see how they trade. It will be glad to see them trade into levels we talked about. It will be glad to see them finally move, but I don't think I want to put money here because last week I tried to trade Euro USD. I'm going to show you the trade I took, and I had to close it in a loss. I think I risked about 1.5% on the trade, and I think I lost about maybe 0.7% out of 1.5. Literally like half of my risk. But then again, that trade would have hit stops. Although I had all that beautiful trades last week, like trades on gold, right? But it's always frustrating that you just take currencies and you just get sluggish movement. It goes 20 pips, returns back, goes 20 pips, returns back, goes 10, returns back, and then you're just tired because it doesn't make any sense any longer. So I don't know what dollar index is going to do. I still remain bullish, of course, courtesy of this liquidity run, right? And just look at this. You can see this old level here. This is the level we were talking about last week. Say, okay, what if the market uses it as resistance, and apparently you want to take this one down when markets are stuck between levels? It's something I've talked about many times, but I think it will be useful if we can pay attention more to scenarios like this when markets are stuck in between levels, because when markets are between levels of support and resistance, okay, support in form of this weekly bullish order block and this volume imbalance, and resistance in form of this mitigation block, all right, and this volume imbalance, okay, you can see it's a recipe for a consolidation. So the only way you can qualify your setup with respect to your bias is if you can see a break and retest of either of these levels. Okay, you can see there's no break of support level and there's no break of resistance level, and that's one of the reasons why in previous commentaries I was like, if we want to see dollar index bullish, would like to see them trade through this level. We want to see them trade through on a closing basis, and on the daily time frame, what I wanted to see was the market stay above these consecutive downward candles. You can see why this makes a whole lot of sense, because it tells us that we are through resistance levels, and now markets can begin to attack buy side liquidity and essentially trade into buy side here. So now you can see the markets actually tried to stay above this level on multiple occasions last week. Okay, they tried to do it on Tuesday, on Wednesday, on Thursday, and kept on finding resistance. So if someone is telling you that there aren't levels of resistance in market, you can just tell them that it's not true, and markets actually respect old levels like this for support or resistance. And that's why a classic break and a retest is how you manage your expectations with respect to your bias. Now, still on the monthly time frame, we can see this candle is indecisive. Usually, these types of price action mean something to me because if I'm bullish and the market is taking a sell side and the markets are indecisive like this, I like to see them take out previous monthly low first and expand into my buy side objective. But then again, when I look at the weekly time frame price action, thinking that they may potentially take out previous monthly low to expand, I don't know how that's gonna fare with price action because we have this level of support here, and markets taking out sell side here would mean they trading below this level, possibly on a closing basis, and I don't know if that makes sense for longs on the index, and I simply do not want to interpret market structure into the future, right? But that's what I would want to see primarily when I see price action like that. But I don't think it makes sense on the index, and there's a reason I'm pointing out because when you look at euro, it's kind of slightly nuanced on euro, but on DXY it seemed like it's a low probability if we see them take out previous monthly low. So currently we're still stuck between levels. The only way to define our bias is to wait for a break and retest. Okay. Now, since I'm still bullish, primarily just because of the liquidity run around these levels here, we'd have to see them trade through on a closing basis and make a retest, and that's how we frame our longs into buy side liquidity here. So this is Euro USD, very similar to dollar index consolidation. The market has simply been consolidation, and we can see last week was indecisive. Okay, even though on the monthly time frame we had an indecisive monthly range, I don't know, possibly they take out previous monthly high. That's a possibility if we begin to see the early portion of March be bullish on euro. But and there is also the fact that markets this is a weekly bearish shadow block, and this is an old volume imbalance here, and you can see the markets are currently at this level here. So the truth is, we could actually see the markets in coming week just open up and decline. Okay, that makes a whole lot of sense because we're currently at key level, or we could see them open up and take out previous weekly high and decline into sell side liquidity because I'm bullish on dollar index, right? But that's just as far as I can think because aside from that, I don't really know how this markets are going to trade because that's the dilemma currently. I don't know. Are you trying bearish? Are you bullish? What's the bearish order block forming after taking sell side liquidity if you are going to be bullish? Now, how am I going to lose my bias? Well, if I see euro trade through this down candle that took out sell side here within this consecutive down plus candle here, this is the order block here. And the reason why I'm not putting this order block into consideration is because I think they're going to take out this low here. So I think this is a draw liquidity after market took out buy side here and buy side here. So that's why I'm not putting all of these consecutive down plus candles into consideration, right? So if I am wrong on bias and market begins to respect these candles and trade through this level here on a closing basis respecting this order block, then I'm done with I'm going to just stay in silence, but I'll be done with bearish. I'm just going to see what the markets are going to do. Possibly it means that they want to reach for the previous monthly high. Possibly it could mean that, okay, that would really make sense, but that would be as far as I can qualify if the market fails to stay below this volume balance and closes above this down close candle. I will just be looking at the previous monthly high and nothing more than that. So that's as far as I can see on euro, and so I'm going to make a quick talk on gold and silver. About 2 weeks prior, I talked about silver and I released the videos for my Discord. And mind you, this is March, and just in case you're interested in Discord membership, I think once you watch this video, membership sign up is currently running, and you can sign up for the Discord. And kindly like and subscribe. I'm trying to get to 1,000 subscribers on YouTube. I think it'd be encouraging to have 1,000 subscribers. It looks beautiful if I have 1,000 subscribers, anyways. So I talked about silver. I talked about gold. I talked about price action around sell side liquidity here, and we talked about what sell side was. Sell side was previous monthly low, right? And we're bullish on this asset, right? And we're likely to see March continue momentum from February, and I'm likely to attack all-time high buy side liquidity here. Now, I think we are bracing for a volatile week because there's a lot of things that happen during the weekend. Saturday with Iran, U.S., Israel, Pakistan, Afghanistan. All of these places, and we're likely to see very volatile price action. Hopefully, it's volatile because we managed to lock in positions on gold last week at the Discord. So currently, the most reasonable thing is to see gold trading to all-time highs, courtesy of the fact that January was bullish, February was bullish, and if you notice something here, you can see February failed to take out January's low, and it's kind of like it's asymmetrical with silver because silver took out January's low, so that's an SMC between gold and silver, and gold is likely to revisit the all-time highs. Okay, so that's the premise. And the weekly bias is bullish, and bullish until we take out buy side liquidity here. So there isn't so much to discuss on the lower time frame because now we have a down close candle, another block, and you can notice something here. You can see this old gap here. Market made a retest of this, an entry drill, institutional order flow entry drill, okay, on gold, and we are likely to draw first into the rejection block and take out buy side liquidity here. So that's premise. Could gold return into this down close candle? Well, I do not know. All right, and I don't want them returning to this down close candle primarily. I don't think they would return to this down close candle, but they can maybe if they meet some near-term buy side objectives. But I'm looking at how they close. We're likely to see a continuation very quickly on Sunday, right? And if Sunday is bullish, that validates the weekly bias, and if they are yet to meet significant buy side objectives like the rejection block at the closing of Monday's candle, you can begin to frame that as the draw liquidity in the early hours of Tuesday, right? So there isn't much levels you can point out on this pairs to say, okay, you're going to return there and you're going to trade, because that's not how I trade gold and silver. Okay, I don't wait for them to return. I use their opening range to frame my bias, and that's a beautiful model. Okay, that's how you can capture trending markets like this, their opening range. And it's not something I want to talk about here, but it's something I talk about with Discord anyways, and that's how we trade gold. So currently on silver, you can see there's a clear inefficiency here. Okay, this balanced price range, right? And the drawn liquidity is to see the markets completely rebalance this inefficiency. At least that's the first buy side objective, rebalancing this inefficiency completely, because now that we're bullish, want to see, now that even the monthly bias is bullish, want to see them completely rebalance this inefficiency and stay above this level here. Okay, so once they stay above here, we want to see them now rebalance this sell side imbalance, buy side inefficiency. Okay, if they can get very close here, and that'll be beautiful too. Okay, that'll be beautiful. So so that's how I'm thinking, because we already have positions on gold, and we're just going to see how this market's going to trade. So primarily, this is a very one-sided market. I would encourage folks to kind of like look into gold and silver, because a market that is one-sided, okay, it's very easy to make money. There's no trophy for trading markets like euro, because what's this really? What's this? Like, what kind of price action is this? This is the entire week. Like, what kind of price action is this? So there's no trophy for anybody to trade here. Now, mind you, we left one consolidation in the previous week. We had one bullish two bullish days, and we are back in consolidation again. So you can see the fact that the market stays in consolidation longer than day trend and currencies, and that's how disgusting this market has been since the second half of 2025. So it only makes sense that you trade markets that are predisposed to go in one direction, and you know stop losing money on markets like this, because at this point it's not about technical skill or anything. Because the reason I went in, for example, last week is because if you look at the 4-hour time frame, you can see when gold, sorry, when down is trading to this level, I was discussing this with Discord that we're gonna be bullish from here, but then we were still below this new week opening gap. Now, mind you, the reason why I wasn't bullish here, oh sorry, the reason why I didn't go long here is because I wanted to confirm short-term or long-term buys before I engage, right? Because taking trades off here would mean that I'm betting that down is going to be bullish. In fact, even if it's going to be bullish, I might not be able to properly manage my trades because I'm seeing long-term interest on DXY, and it's a bit difficult for me to just scalp this range. So I waited for a closing basis through here, and it changed the state in delivery. So we're riding on. We stayed in all of this consolidation, and until I just got tired of all of this price action, and I gave everyone permission to close the trades, and it's no longer a participant in all of this mess. Okay, so it's just a terrible thing, sideways market, and I don't know what they're gonna do really. And this is consolidation we're currently in. Like Euro, they could take our previous weekly low. That would make sense because last week was sideways markets, and this is a bullish order block. They could take our previous weekly low inside this bullish order block and expand and close up of this level. That would make a whole lot of sense, and it will set the stage for March trading. Now, set the stage for March trading could mean but March could still be in consolidation. So I really don't know. I'm just going to take it 1 week at a time. This week, market could go either ways, and there's nothing to hard price. There's really nothing to talk about. I already explained everything that we should put into consideration, and we just would allow for markets to open, and we begin to speculate from there. I hope you found this one insightful. Until I talk to you again, be safe.